I've been a financial advisor now for over 20 years. And at some point, most of my clients end up dealing with a bank. And so in today's video, I want to share with you 7 things that banks don't want you to know. Let's go for a little walk and talk about it. The first one is banks only like to lend to people that don't need the money. So businesses that are doing really well, mortgages where people have plenty of money to pay back the mortgage and could probably pay cash for the mortgage. So those are the bank's favorite clients. And they really don't want you to know that if you need the loan, they're reluctant to give you the loan. So that's an unfortunate truth, but it's the reality of things. And on the flip side of that is just because you qualify for the loan doesn't mean that it's going to be comfortable to pay it back. It doesn't mean that, well, the bank approved me, therefore it must be okay for me to have this much debt. Those things go in cycles, and sometimes banks are overly generous with how much they're willing to loan people, and then other times it's hard to get a loan. But in general, just because the bank gave you the loan doesn't mean, well, my income must be sufficient in order to cover it. Oftentimes people can get themselves in trouble because the bank will lend them more money than what they need. And again, that cycles through. There's times, obviously, before the financial crisis, banks were getting too lenient, banks were lending too much. And I would argue even today, banks will lend consumers more than they probably can comfortably pay back. So buyer beware. You need to do the math yourself and look at the ratios that are healthy for you and are comfortable for you to pay back. Okay. The third thing they don't want you to know is the amount that they'll loan you today could be very different than the amount they would have loaned you a year ago or 2 years ago, or the amount that they'll loan you a year from now. Those things change, and it changes based on the competitive field and then also the regulatory field. There's a lot of regulations for banks. In general, for every dollar that you and I give banks, they can lend out $5 or more because of the way the banking system works. So it really can be a magical system for the economy. It can really lubricate the economy and get things going, but it can also get people in trouble. So know that the amount that they're going to give you today could be different based on different times, even though for you, the health of being able to pay back that loan probably didn't change much at all. So again, buyer beware. The next thing, speaking of buyer beware, is there's lopsided information with loans. The bank has a lot more information than you do. Particularly, for many of us, this is going to be the most important contract that we ever sign. But the bank knows that few of us are going to get an attorney to look at that loan document, right? Think about your mortgage, which is probably for most of us our largest debt if you have a mortgage. Did you have an attorney look at it? Very few people do, right? And the bank will say, well, it's non-negotiable. And that's the next item is banks will tell you that loan documents are non-negotiable. But I can tell you from experience, it was a while ago, but a couple decades ago, I took out a business loan. And of course, the bank wanted a personal guarantee and just said, you know what, we absolutely don't do loans without a personal guarantee. But I was reluctant to do it because it was a loan bigger than my mortgage. And so I hired a professional, somebody to negotiate with several different banks, get various banks to the table. Again, this was a business loan, not a mortgage. But ultimately, I was able to do that loan without a personal guarantee, which really gave me a lot more sleep at night factor. So even though the bank tells you it's not negotiable, oftentimes things are negotiable. Okay, the next thing banks don't want you to know is time's not on your side, time's on the bank side. And particularly with our mortgages, right? We have closings coming up. So you're maybe selling your home, you're buying a home, and everything has to happen in a very tight window. And frankly, I believe that the real estate industry and the banking industry kind of relies on that, right? How many times do you get your documents a week before closing? Never. It doesn't happen. If you're lucky, you can get your documents 2 or 3 days before closing. And that's one of the secrets, is get your documents as early as you can. Like I said, it's going to be hard to get them a week ahead of time. I can tell you, once I was on vacation when my home was closing, and so I actually got the documents 10 days ahead of time. And believe it or not, the documents were for a different type of loan than what I had negotiated with the bank. And if I had been closing a day or two before the closing on my house, if I'd been looking to sign those documents, I would not have had a chance to say, now wait a minute, this is not the loan that we talked about. So it was back before the financial crisis where you could get different types of loans. And they were giving me a higher interest rate that we had agreed to, and a loan with fewer of the features that I wanted to have in mind. Now, in my case, I had enough time because I happened to be going on vacation, which is what pushed for getting the documents early. In fact, I was going on a cruise, a Disney cruise. My kids were a little bit younger. And back then, you really didn't have internet access. So we didn't have a choice. We had to get the documents early. And thank goodness that we did, because again, the documents were wrong and we had time. Interestingly, the bank was able to turn it around in 24 hours. Originally, my my realtor was saying, oh, we don't have time to renegotiate this loan. And to me, it wasn't a renegotiation. It was what we had originally agreed to. And then I just said, I did something I probably shouldn't have done. I said, I don't care, give me a call when the documents are ready to be signed. Fortunately, I had a couple days before I headed off on vacation. And within 24 hours, they were able to do it. So the bank's going to tell you things are not negotiable, but my experience is, and I had 2 data points for it, anecdotally for myself and through clients, that things are more negotiable than what you think. The next thing, most of us are going to deal, at least with our mortgage, we're going to deal with our mortgage through a mortgage broker. And it's important for you to know whether your mortgage broker is acting as a fiduciary to you. A fiduciary is somebody that has to put your interest ahead of their own. It's a really important question to always ask anybody that's working with you. Who is your fiduciary obligation to? Is it to me? Is it to your company? Is it to somebody else? And most mortgage brokers are not a fiduciary to their clients 100% of the time. And so they can propose loans that may not be in your best interest. So just be careful. And if they can get you to sign up, some loans are more profitable than other loans. And so if they can get you to sign up for a more profitable loan for them, then they can make more money. And one of the ways that can be done is by a slightly higher interest rate. Let's say prevailing interest rates are 7.5%. If they can get you to sign up with a loan that's 7.625, just an eighth of a point more, percentage more, that's a more profitable loan for them. So these are the things that banks don't want you to know. But one thing I do want you to know is that our path up to retirement, we need to be able to enjoy that. Many of us are looking forward to retirement, but we need to be able to enjoy that path. And that's what this video is here. 7 things that I want you to think about stop doing in your 50s and 60s to enjoy the journey up to retirement. Thanks for watching this one, and I'll see you in that video. Bye-bye.